My guest this segment is Bertan Atalay. He's a former CFO and member of the advisory board for Current Water Technologies Inc., trading on the TSX Venture under symbol WATR. Bertan, welcome.
Nice seeing you.
Let's start with an overview. What does Current Water Technologies do?
Current Water Technologies is a leading company which has a proprietary technology to remove ammonia. It serves industrial customers, leading mining companies, industrial farmers, municipalities, with one aim in mind, that is to treat their wastewater with ammonia-free discharge, complying with the regulations currently available in or valid in provinces and states down in the U.S.
Okay, so what is the full range of industries globally that generate wastewater with a high content of ammonia that has to be addressed by this?
Right. Well, it's a very large space that you're looking at. The company went through quite a bit of change in the past 12 months, particularly with a merger and restructuring of the company and its business model. Now we're focusing on those industries which predominantly in mining, heavy industrial, iron and steel, farming, and of course municipal. Particularly the municipal sector is very large, but we're currently working on focusing our attention to non-regulated markets, and non-regulated meaning non-regulated commercially. So these primarily include, in our case, mining and heavy industrial, and a bit of legacy industrial farming down in the U.S.
Okay, so are you purifying water to the point where it's potable?
No, our purpose isn't to produce potable water, despite the fact that the technology can be custom made to help with potable water generation, but that's not our purpose. Our purpose is to meet the currently valid regulations to discharge from areas such as mine tailings and waste management areas, abandoned or currently active. And therefore, we don't claim to be potable water producers.
All right, so how does the revenue model work?
In the past, the company, like any other water technology, wastewater treatment technology, was focusing on selling technology to end users, like an equipment supplier. We're in the process of changing that model to be a service-oriented company, which means a service for water treatment. So we're trying to engage with our customers to give them a service for a longer period, which is in the order of 5 to 10 years. The purpose is to go from a fledgling technology developer, which has proven itself in the field as well as on the bench. Most of these technologies are actually bench proven, but never actually proved themselves in the field. Whereas Current Water has proved itself for the past 15 years in various markets practically around the world. So therefore, right now what we're trying to do is go from an equipment supply model to a service provider, where we're going to try to underpin the valuation of the company with services.
So you've been in business for 15 years?
Current Waters has, yes.
Who are your biggest clients?
The customers in the past included anywhere from Middle East to US. Companies like which operate very large fueling stations, for example. A couple of mining companies which procured demonstration plans to see if the technology proved itself, and it proved itself very, very successfully in the past. And we have delivered a couple of units, which is one is operating in Pennsylvania in the U.S. The other one is on its way out to Middle East.
Okay, and so you bring the water up to a standard where it can be discharged into the environment in compliance with, for example, in the United States, EPA standards?
Correct. Well, let's focus on Canada for a minute. The primary target we have is ammonia. We claim that we're the #1 ammonia people. Right. The technology that the company has effectively removes the ammonia very, very effectively. The competition to this technology is bacterial treatment, which, in our opinion, does have limitations. For example, it doesn't work in freezing waters, whereas ours does. And our byproduct has got no offensive toxins, whereas others do. Ours is a dummy system, so to speak. We have no rotating equipment. It's quite simple, in fact, and containerized, so we can actually modularize and send it anywhere around the world practically. It uses very little amount of energy and remotely operated. So all these have already been proven, and the task right now is to commercially prove the company. So it is in the process of becoming commercial, which is a very, very little focused fact in these sorts of companies where commercialization takes a back seat to technical development. And I think these sort of companies miss out on massive market space. One of our, for example, target customer has got 700 locations. Just want to highlight your question, underline your question, what's our revenue model? We were looking for in the next few years, 2 to 3 years, looking to establish somewhere in the order of less than 40 units operating on a long-term basis. Whereas if you were to sell 40 units, there is an EBITDA that you can have, which doesn't necessarily mean a sustainable business.
One time.
Potentially. It is an indication, of course, that you may continue selling large numbers. But if you have 40 units operating and you're servicing them, which reduces the capital investment by your customers, but also provides you a sustainable earnings potential, which then increases your multiple. So we're trying to go from a growth company only to a growth company with yield, which is what I believe.
You mean like to pay a dividend out to shareholders?
To the extent possible. But
what's the revenue picture look like today?
The company is looking at somewhere between $2 to $2.5 million revenues by end of the year. The target is going to be larger next year. We hope to reach somewhere in the order of $5 million total revenues for both sides of the company. One is the former Pumptronics, which is now on board. And of course the current water technologies long-term service contracts that we're working on. We have a target of putting somewhere in the order of 2, maybe 3 of them in the next 18 months on a long-term basis, which we then believe will open up all kinds of horizons for us.
Okay.
The other thing I want to underline is we're sort of pulling back our resources and focus to North America, meaning Canada and US.
Okay.
Although international is very, very attractive, and there are one-off opportunities which may lead very large payoffs, but again, the underlying purpose we have is sustainability.
Okay.
And I think the company and its management do understand that.
How many shares out?
Currently about 150.
150 million?
Yeah.
And cash on hand?
We have limited amount of cash. We're about to place some financing. And we're looking at a larger financing on the back of some of these contracts. So we'll be looking at placing somewhere in the order of $2 to $3 million in the next 3 or 4 months. And there is a financing that's being closed, so I should probably leave for the company to announce that in the next few weeks.
Sure. All right, Bertan, that's a great overview of the company. We'll leave it there for now. Come back to you in a quarter's time and see how you're doing. Thanks very much for joining me.
Thank you very much. I appreciate it.